You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, welcome back to Options Boot Camp, what the cool kids call a little bit of the old OBC, the premier options educational program. My name, of course, Mark Longo from the THE, optionsinsider.com. Happy to be holding court on another Education Wednesday. You know, I just got asked yesterday, what is my favorite program on the network? I think I could say with my favorite days is certainly Education Wednesday. Not because I have to talk to Dan. That's kind of the downside of it. But really, it's because we get to talk to you folks, answer all your questions. It's kind of fun. Options Boot Camp obviously has a special place in my heart, as do all the shows on the network. They are all my children at the end of the day. You should be checking them all out. If you're just listening to Boot Camp, I know there's a dedicated audience for Boot Camp out there. We love you all, but you're really doing yourself a disservice. It costs you nothing. Just literally wherever you're listening to this, just search for our network. It'll probably be recommended right below where you're subscribed to Boot Camp. Just click subscribe to that. And now you get, instead of one, pretty much close to a dozen programs out there. All sorts of cool stuff. You like vol, we got volatility views. You like futures options, this week in futures options. You like some daily unusual activity, all kinds of fun stuff. But that's twice a week, bi-weekly, I should say. That's the option block. And then, of course, other stuff, crypto, rundown, you name it. All kinds of fun popping off out there on the network. And, of course, if you like what you hear, throw a like, a star, or comment, just like our listener this week did, Elio87, throwing us 5 stars, saying, I started listening during the meme stock craze. These guys really lay down the knowledge. Oh, thank you. I like learning from guys who've been there and done that and aren't just internet, quote, experts. Well, we thank you for that there, Elio, and everyone else who's taken the time to rate and review. It does help new people continue to discover the content, and of course, it goes a long way towards helping new people and indeed new firms discover the show out there, which is fun. And of course, if you want to discover more content in your life, by all means, head on over to the website. First off, you get all the rest of our shows there. You get great content like the most actives. People devour that just every day. We do a couple of posts on what are the most active options for that day. People love that. If you want just that, that's all there for you. All the earnings data, Matt and his team crunches for us. We give that to you completely for free as well. Man, we like you folks. Over a decade's worth of boot camp content for free, 17 plus years worth of the network for free, all the earnings data for free, the most actives for free. We throw a lot of stuff your way. If you want to go above and beyond, you want to maybe get some extra content above all that, then of course, theoptionsinsider.com/pro. The only thing in our history we've ever charged for, and that's just because people wanted it and it takes more time and more work and more effort to produce. So for those of you who want it out there, it is available, theoptionsinsider.com/pro. Great pro Q&As, deep dives into unusual activity. That show, Options Oddities, always getting me into trouble in terms of talking me into fun trades. Again, they work out pretty well usually, but still, it's kind of fun. It's like, oh, I have more trades to put on, more names to watch now. It's fun. And of course, giveaways coming up. Going to be giving away the April Pro Trading Crate soon. Theoptionsinsider.com/pro, the place to go, as we are joined once again on the old boot camp drill instructor proving ground by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show. How are things in the land of to
Oh man, it is freaking swell over here, man. It's doing great. Just living the dream, teaching the world options one trader at a time.
Living the dream indeed, as we head on into a little bit of very timely options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, Dan, let's get to it. It's time for a little bit of the old options drills, a portion that really goes a little bit beyond what we talk about in basic training, maybe explore some options concepts, or in this case, the underlying as well, and what's going on from that perspective out there. And a lot's going on right now, Dan. Listeners may realize, if you're listening to this right now, of course, and even if you're listening down the road, I have a feeling this topic will still be contentious then, which is what's going on with the world of stocks. And, you know, we've come to know, and some people love, some people hate, this whole opening and closing bell situation that we have now. You know, markets open, bell rings, stocks trades happen, bell rings again, markets are closed. Now you have some after hours action. We've talked about that recently with the earnings trades and people in the options world getting mad that the stocks are vacillating around in the after hours. The options are not. So we've talked about after hours options trading. But now it seems like the debate is coming back squarely into the crosshairs for stock trading, and whether the notion of that closing and opening bell, whether that's an antiquated notion, listeners. We have, of course, Steve Cohen and his crew petitioning the SEC to maybe allow a 24-hour exchange. NYSE petitioning their members, putting a poll out there just this week, asking that exact same thing. Is it time for the big board to go 24 hours a day? Whether that's 24/7, 24/5, what format that would look like. It's a very contentious thing. So we're starting there, Dan, and then we'll expand into the world of options. But first off, before we get into that, you were a market maker like myself. You come from that traditional opening to closing bell world. What are your thoughts on this debate right now? Are you yay or nay, pro or con on the whole stock should be 24 hours or not?
Well, Mark, I am I'm in the nay camp. I don't think that stocks need to be 24 hours. I don't think that adds value to the price discovery process. I don't think it's necessarily good for any traders. I I've got a lot of supporting thoughts on that. I don't know if you're ready for me to go off on the rails right now, but I do have a lot to say on it.
Let's get some more data first before we unleash Dan. And Dan goes off the rails. All right, first, we have some questions of the week about this exact topic. We like putting it out to our audience. I've said it many times, and I'm not just joking. You folks, at the end of the day, are the ultimate arbiters for all things here on the network, on the show. You suggest topics. You respond to our questions. Give us your thoughts. You folks are the best. You know we love you out there. And right now, we have a question going, Dan, which is quite simple. NYSE is considering allowing 24-hour stock trading. Do you think stocks should trade 24 hours? Yes or no? Now, Dan, bearing in mind that for our audience, especially where we're putting these polls out there on Twitter, it's a very options-savvy audience. So we're not speaking to the broad masses. We're speaking to some folks who are down the rabbit hole a bit. Even for the audience of this show, you're at very least options curious. So you're one step beyond the traditional public. So bear that in mind, Dan. But first off, sounds like your vote is no. Where do you think our options savvy audience, where do you think they're falling on this issue? Yes or no, sir?
One of these days I got to think ahead and I got to cheat.
There will be no cheating, sir.
Yeah. I think that they are also saying no. That's what I think.
Interesting. Why do you think that? I think a lot of people would assume they're saying yes. Why do you think they're going no, sir?
Because they listen to our show and probably know that that's been my and if I'm not mistaken, your perspective on this for a while. And I think when you listen to somebody, you sort of start thinking like, I don't know, I don't really know why. I just think that I just think that that's the right answer.
So you think we poisoned our listeners? We are cult leaders and we have infected them with our own mindset out there. Well, in this case, you are correct. We have deeply infected them, Dan. 71.7% saying no, only 28.3% saying yes, which is interesting because, again, we speak to that bleeding edge audience. You think they would want more. They want more trading all the time. And yet, even they are writing in to say, no, we like the respite that is given to us by the closing bell. Just a couple of comments people made on this. We had Everyman Smith saying, I traded crypto back in the early days. Once the bots got the handle on 24 hours, it became a nightmare of wondering what you'd wake up to every day. For me, it would seem to be a big and irreversible mistake. So he's firmly in the no camp. One of our pro members, Age Del Aquarius, he just wrote no, and just no, all exclamation points. So I wonder what he voted for. There are some dissenting opinions, though. We have futures options trader. I wonder what he trades, saying futures options already trade 23.5 with a break at 5 p.m. for an hour. What's the big deal? So he would probably be in the yes camp. But Dan, yeah, you and I have said no before. And now our audience, the people who this is ostensibly aimed at, also saying no. I think at the end of the day, I think some of this, Dan, also, I think goes back to more recent history with the pandemic. I think people underestimate the value of having a stop, of having a close to things, giving you time to think about them. Look at this, just the past couple of weekends, Dan. We've had literal examples of weekend risk where crazy things were popping off overseas that impact volatility, impact the markets. Imagine if the markets were open during every tick of that, when every bomb was dropping and the drones were being launched and the responses were being made. Are they going to shoot them? Imagine the vacillations we'd be seeing in the after hours, and they'd be huge vacillations because the markets would be very illiquid. So yeah, it would add, I think, to a lot of the maybe needlessly to the stress and the anxiety of people who now they get to, obviously they have some after hour sessions they could trade in the after hours on Sunday and early before they open on Monday, but it does kind of give people some time to think. And of course we saw coming in on the Mondays the last few weeks that the market's reaction was kind of muted to what could have been pretty dire if it had been going on before. So there is some value to that. Of course, there's the other side of it. There's, the staffing and logistics things. All these firms would have to staff up, and it'd be a huge headache and an expense for firms that aren't making a boatload of money right now to come out and now add 24-hour desks and everything else like that, which is an aspect people don't consider. They want zero cost commissions and everything like that, but they want to do these things that are going to add to the expenses, which makes that probably a little bit less tenable in the long term. And I think also, the notion of that closing bell, like as our listeners have pointed out, some of the Delta One stuff like futures trade almost 24/7 now, close to it for a lot of products out there. And then, of course, if you want another retail-friendly asset class that trades 24/7, 365 right now, it's crypto. And that's where some of this outcry is coming from. We have listeners on our crypto show who say, hey, I can trade my spot ETH whenever the hell I want, or Bitcoin or Solana. I can buy it at Sunday at 4 p.m. if I want. Why can't I do that with my shares of Apple or anything else like that? So there is, I would say, a newer class of entrant to the space, Dan, that knows only 24-hour trading because they've come through the world of crypto. And that's their entry point. That was their gateway drug. So for them, it seems anathema that stocks don't do that, Dan. What are your thoughts for those people?
Well, I mean, crypto is an asset that isn't even an asset, really. Crypto is.
Ooh, fighting words. Hate mail, Dan@markettaker.com. You go get them, listeners.
I mean, there's no intrinsic value to it at this point. There was talk. I don't know. I mean, just because crypto trades 24/7 doesn't mean that there's value added to making stocks trade 24/7. Because I'm going for it right now, Mark. I got to go for it.
Go, sir. The floor is yours. I've set aside 48 minutes for your rant. Go ahead.
So, I mean, 24-hour stock trading is not good for anyone. Arguably, it could be a little bit good for gamma scalpers, which is an extremely small percentage of the market, but that's it. Because if you look at right now, the after hours and before market trading, it's thin and illiquid in basically everything. And if you then take that already thin thing, it's like rolling out a pizza dough and it's already so thin, you try and make it even thinner and it's gonna fall apart. And boy, I mean, those words make it a perfect analogy, I think. You're just adding illiquidity, which is horrendous for novice traders or retail traders in general. We have in stocks and futures circuit breakers, or limit moves, which we'll call them in futures, and those are in place for when the market's overheated and just needs a break. But you know what? The market needs a regular break anyway, just to reset and give people time to think about things. Like, that's how humans work, right? You have to sleep sometimes, and sometimes you need a vacation, right? The market closes every night, and sometimes there's the circuit breakers that kick in. You need that break in the action so that people can collect their heads and their thoughts, because there's basically two things that happen with markets. They do nothing, or they trend. And when the market is trading after hours doing nothing, like not really revaluating, just trading randomly, that harms the price discovery process. It creates greater illiquidity and consequently price volatility because of the very low volume. And so that just makes the market worse in those more stable periods. But when the market is trending, like some sort of news comes out, because there's so little volume and so little volume on each bid and each offer, it will exacerbate those moves. And I don't know. Maybe some of these algo folks can figure out how to, sweep up money from all the lemmings who are trading it, who aren't algo traders. They might have some sort of advantage. The market makers who gamma scalp, if it's illiquid, that's fine. But those are the only people who could possibly benefit. Anybody else, everyone else's answer should be no. This should not be 24 hours.
Like our pro listeners in the chat agree too. Option God says, my answer on 24/7 trading is no. Frank 1209 says, crypto is small compared to stocks, would be the too crazy of markets and too hard for average traders to deal with. So yeah, Dan, the answer in our audience, at least right now, is a resounding no. What you mentioned, that kind of circuit breaker, that pause, kind of good for people's sanity. Imagine if now it was 24/7 and now that new options or new stock trader now all of a sudden is getting alerts on their phone, 3 a.m. Apple just sold off 5%, off of some news in China. So they wake up to alerts on their phone and now they're scrambling to trade their Apple or get out of it, whatever the case may be. I think it does add a needless layer of anxiety, which I think we could all collectively agree society does not need right now. Dovetailing this into the options side as well. Of course, I mentioned this is timely for a couple of reasons. Dan, I used to years ago when I go down to the OIC conference, they set me up with a big studio. I talk with everybody over the span of a week, and we get kind of the pulse of the options landscape on a variety of issues. I used to ask them all routinely every year about after hours options trading. I stopped about, 4 or 5 years ago because it seemed like there was no movement on that and there was not going to be any. I'm guessing after this, Dan, I might have to revisit that this week coming up or next week. So look for that, listeners. Look for me to put the various CEOs of brokerage firms and exchanges and all kinds of other trading firms put their feet to the fire on this fun and somewhat contentious issue out there, Dan. But dovetailing it into the world of options, which is, of course, our bread and butter, the next logical question is, what about options? What happens to options in this world? Let's say stocks, Dan, this stuff passes with NYSE and SEC, and now we have 24-hour-a-day stock trading. What happens to options? What happens in that environment? Or maybe, let's say people are just considering extending options hours. What does that look like? What are we looking like here? Are we looking like just full 24-hour trading? So if stocks are trading 24 hours, then I guess options have to trade 24 hours. Are we looking at maybe some more limited pilot type programs like people have suggested to me in the past, like maybe limiting it to your high volume names only? So your pink sheet biotech, maybe not so much, but your Apples, your Teslas, your Facebooks, your Amazons, all that fun, they get the more extended hours treatment. Or maybe we limit it to certain times of the year, like earnings season, or maybe people have other crazy responses for that as well. And again, get creative out there with your responses. But Dan, where do you fall on this issue? Do you think if stocks go 24 hours a day, then options have to be that by definition? Do you think even if stocks don't go that way, are we looking at some sort of extended session for options? And either way, what format do you think that should take, Dan?
Well, no, if stocks were to go 24 hours, I definitely do not think that options would need to go 24 hours. Right now there's after hours and before market trading in stocks, and we don't have options trading at that time. And, that's another thing too, that would just take something that's already thin and make it thinner, is the liquidity in options is, it depends how you measure it, but is arguably so much less than it is in stocks, because for any one given stocks, you have at least 4 to 12 expirations of calls and puts of many strikes. People are going to get run over trying to get a decent fill, or just not get filled at all, and it's not beneficial. It doesn't help. It doesn't help individuals. It doesn't help the price discovery process. It's not beneficial.
Well, let's see what our audience says, Dan, because we asked them this question as well, and they, again, are the ultimate arbiters. We said, hey, if U.S. options trading hours are extended, what would that look like? We gave you 3 choices, but also the infamous other. Allow you folks to chime in with whatever you think is best. Is it just full 24-hour options trading across the board? Or, again, limited to maybe the high-volume names? Or maybe limited for a certain time frame like earnings season? Or something else going on out there? And right now, Dan, our audience is evenly split. 42.9% saying it should be the full 24-hour options trading. So if stocks are going to go that way, options should follow suit. And then also 42.9%, so exactly evenly split there, for high volume names only, which again is interesting, kind of limiting it by how much paper they do. And then 14.3% coming in for earnings season only. And then we got a bunch of others chiming in. Again, people saying, well, futures do it. Who cares about the options? No big deal. Age coming in again. Age Delacour saying no one needs to trade some preferred stock, which does 100 shares a day at 3 a.m. Eastern time. Keep it to the high volume stocks only. So, Dan, our audience is split on full, if it does happen. Now, that was the caveat we gave them. They were already against it happening. If it does happen, they say it probably should go either full 24 hours, just like stocks do, or limit it to the high volume names, sir. What are your thoughts?
No, I mean, I don't see an actual argument to, if stocks go 24 hours, options should. Like, if somebody's just saying, yes, they should, but there's no supporting evidence or detail there. As far as, what was the second half of that?
Limiting it just to the high volume names, like your Apples and your Teslas and that sort of thing.
Yeah, that's a terrible idea. Because like, the fact of the matter is that in option trading these days, it's become very, very complex to be able to make money. And you can't make money like market makers back in our days used to do, where, you just make markets in Ford options, or Apple options. The only way anybody can be a market maker in options now is to trade dispersion models, and it's Apple vol versus Amazon vol versus the QQQs versus Microsoft, and if just some of those trade after hours, that's going to just mess up that process and make something that's an established way for market makers to make money more disparate, and it limits the choices of traders, and it's going to be frustrating because Apple's going to have earnings and you're going to hedge in the after hours, but some other company, whatever, MP Mining has earnings come out, but you can't hedge that one. It just doesn't make any sense. I mean, I guess if you draw the line to ETFs or something, yes, but I don't know. Now I'm like trying to talk myself into an already bad idea.
Dan wants to trade options on his pink sheet names too, damn it. He wants all of it, not just Tesla and Apple. Nichols raises an interesting question in our live chat. Would we have a greater risk of a stock market crash if they were 24/7? Well, certainly we could expect exacerbated moves in the underlying in those very illiquid hours. I mean, look at right now when stocks pop off with their earnings announcements. It's in the less liquid session, right? The after hour session. So you have news hitting the market. You have all sorts of crazy gyrations in the underlying. Look at any big earnings announcement. Stock's going to explode. It's going to sell off. It's going to go back. It's going to vacillate for a while till they find some sort of equilibrium. And you could expect a lot more of that, I think, in the after hours. Also look at some of the other names that are trading 24/7 right now, like the crypto names. Very frequently, the highs and lows for the week are made in the less liquid sessions, the weekend sessions, the after hour sessions, again, because people aren't trading, so the markets are very thin. So you're more prone to dramatic movements. So a crash, extreme movements, I think, definitely. Dan, what do you say about that? The prospect for a crash being exacerbated in the after hours?
Well, yeah. I mean, if gun to my head, I had to pick, is after hours trading likely to lead to more stability or more instability? The obvious answer is more instability. It's definitely not going to make the markets safer and more stable. That's for sure.
All right. So just to summarize for all of you who just listened to that last segment, of course, Dan and I both against 24/7 stock trading. And as a result, of course, both against 24/7 options trading for obvious reasons. Illiquid sessions does exacerbate the probability of extreme moves that could potentially lead to a crash or something along those lines. Could be an extreme upside move. We're just going to see more volatility in those sessions as a result. So it doesn't really add a lot to the table. and also puts a lot of stress, a lot of strain, a lot of anxiety on the system already that probably doesn't need it. So the benefits not really there to outweigh the risks and the costs that they pose out there. So Dan and I both know, and it sounds like an overwhelming majority of our audience also against it, which is kind of interesting. And we like to see that out there. You folks not just agreeing with us, but you folks expressing your opinions out there. You are a savvy and, dare I say it, very attractive bunch out there. Let's get out to you folks now with some of your questions of the week.
Mail call. Time to look at questions submitted by our listeners.
Your questions of the week. Let's get out to Mr. Dan now with his Market Taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
I'm not going to lie, Dan. I like going to the danger zone. What could I say? I don't care that it gets us banned on like all the different platforms. I don't care, Dan. I need a little bit of logins in my life. And if that's wrong, I don't want to be right, sir.
Oh, goodness. All right. So I've got a question of the week here. Why don't we hear more about Roe? Because, you know, people who have read my book have come to me and said, oh, Dan, listen, I know that we went through this period where interest rates were basically zero and they never changed for a decade or something. And so Roe sort of fell out of favor. But now interest rates are higher and they fluctuate. And there's people betting on interest rates. Like, shouldn't we be hearing a lot more about Roe, how interest rates affect options? And the answer is, yeah, kind of. It depends. Roe affects options that have a fair amount, that have more time until expiration. If we're talking about a 2-day option, heck, even a 10-day option, interest rates are not really going to have that much of an effect on options. If we start going out to 3 month, 6 month, and especially if those periods have Fed announcements that are sort of controversial, where will they or won't they raise them or lower them or whatever, then yeah, it's going to matter more. But you really have to get out beyond about 6 months to even start caring about Roe. And frankly, most of my option trades are shorter than 6 months. Even if I'm doing something like a time spread or poor man's covered call or something like that, even the long-term option is now long enough where I really care that much about Roe.
Speak for yourself, sir. I'm all about Roe in my 0 DTE options. And how dare you dispute that, sir? How dare you? How dare you? That's all about Roe trading out there. Unfortunately, speaking of time decay, the time has decayed on this episode, listeners, as we're coming up against it already. Man, time flies when we're talking 24-hour trading. All right, everybody, that's going to do it for this week's episode. But don't worry, all you pro folks like Frank and everybody else who's hanging out and chatting with us here, you don't have to wait at all. The next episode's coming at you instantly on the live side. Of course, by the time you're hearing our next week episode, which we're recording live next, listeners, I will be down at the OIC conference putting these very same questions that you folks have to all of the movers and shakers in the world of options, so we'll get their thoughts on this issue. I have a feeling it should be pretty interesting and or contentious to hear what the brokers and the exchanges and the trading firms have to say on this very issue. Kind of depends where their bread is buttered, what their thoughts are going to be on this, I think. But it shall be fun to see. So we'll put that content out. That will all go out to our pro side first, listeners. That will be coming out later on the full network. If you want to check all that stuff out early, get the live streams, get everything else we do over there, the exclusive shows, theoptionsinsider.com/pro. The place to go to learn more. And Mr. Dan, where should they go if they want to learn more about all things Roe, sir?
Yeah, sure, man. I can help. I can chat with you. Go over to markettaker.com, 2 T's in a row, and join free. And for the time being, you can actually be part of our online community chat room. It's a Slack room where you can ask me DM questions or be part of the community, contribute, and get some of the benefits. And we welcome our listeners with open arms.
You gotta sign up for Dan's newsletter just to see the image of him every week, standing there holding his chin, saying,
Oh, yeah.
That's my favorite thing. I look forward to that in my inbox every week. You should too, listeners, at Market Taker. Don't forget the second T for Theta. And also don't forget to check out our friends over there at Public. They are the reason the show is coming at you, after all, free out there. So kick the tires and light the fires. Try out this rebate thing. We always like to see a new entrance to the world of options, especially ones that are bringing something new to the table. We always like that. Let us know your experience with them as well. We're curious out there. And at the very least, let them know you heard them on the Options Insider Radio Network. That will go a long way towards keeping these shows that you love, that have been free for over a decade. Keep them free for you folks down the road as we keep on rolling. Dan and I right on into our next episode immediately, post haste. And for the rest of you, we'll see you back here on the on-demand side next week, another episode of Options Bootcamp. Stay safe out there, everybody.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.